you want an exposure to a market or an
Everything they need in one place.
Be the world's foremost authority on
Individuals, advisors and institutions.
Hello and welcome to Morningstar. I'm Emma Wall and I'm joined today by Nick Kirrage, manager of the Schroeder Recovery Fund. Hi Nick.
Hi Emma.
So I've just listened to your talk at the Morningstar Investment Conference and you made some really interesting points about how there's no such thing necessarily as a great company which leads to a great investment. It's all about price.
Yeah, I think it's amazing actually that in the last 15 years, I don't think we've had a time where more people are confusing great companies and great investments. You know, great companies have everything that you would want to own about a business, great cash flows and barriers to entry and brands, all those things that are wonderful, but they're not necessarily a great investment. The only thing that makes a great company a great investment is a fantastic price.
I think you made a really interesting point as well, using tech stocks as an example, because everyone remembers the tech bubble bursting. But then if you look at what's become so integrated into our lives, it's technology. I mean, it's not that technology was a bad bet, it's just that buying it at extremely high price was wrong.
I think that's, it's very, very difficult for people to understand that, even if you get the forecast correct, and let's face it, people said tech would change our lives, and it absolutely has. I mean, it's changed everyone's lives. Everyone has the internet on their phone and internet shops today, and it's hard to think of a way in which tech has not touched our lives or changed our lives. And yet buying tech investments was the wrong thing to do. You made no money out of that because, again, you were right about the future, but you were wrong about the price you paid, and that's the important lesson.
And that's the thing that just goes to point out that there are very few constants in the market. You said over those last 15 years where we seem to have worked extremely hard and actually not gone very far at all, that politics has changed, policy has changed, industry has changed, but there has been a constant, and that's humans. But how can you use that knowledge to sort of dictate investment choices?
I think it is that human behaviour, that fear and greed in the market that creates the opportunity. You tie yourself up in knots if you're trying to forecast the future the whole time in terms of the way the macro will develop, or the thematics, or the politics, or the investments themselves. I mean, if you'd gone back 50 years, people would have thought the internet was witchcraft. So all of those things I think are very, very hard. And as we said with things like the tech bubble, even if you nailed it and you were totally right, that doesn't necessarily lead you to make the right investments. So what we're looking to do as value investors is understand how humans behave. When they're being greedy, be cautious, and when they're being very fearful and scared, there are usually a lot of opportunities, and it's about being brave.
And we talked a bit there about what's happened in the past. You've just said you can't really predict the future because there's so much change going on. But I think one of the big challenges facing investors right now is the fact that we know at some point bond yields are going to come up, bond price is going to come down. So a lot of investors are answering that conundrum by just pouring money into equities. However, you made the point that bond yields will affect equities. So how do we solve that?
I think that relationship, it occurs in many, many different ways. From the justifications for higher valuations in the equity market because bond yields are depressed, or from M&A. There's a lot of speculation about whether an M&A will accelerate from here because the biggest companies in the market, the most successful businesses, the perceived stable businesses, have never been able to finance cheaper in their entire history. So why wouldn't they take advantage of that to do some deals? And I think that kind of concerns us in the way that has the potential for, the bond market behaviour, bubble, call it what you will, to feed into the equity market, that contagion in some way. And that is something that we need to be eyes open about, something we need to think about and make sure we don't get swept along with. And I think we're very conscious of that.
I suppose that brings us back to price. That's the only barometer you can rely on.
In the end, the price is the obsession for us. And history suggests that's a fine obsession.
Nick, thank you very much.
Thanks, Emma.
This is Emma Wall for Morningstar. Thank you for watching.